We have seen tech companies wait and wait and wait, and those that did go public, the very, very few, have not done so well. Not to point out to Snap, for example, in which you are an investor.
Yes.
What's the appetite like for the rest of the year?
Well, I mean, going into this year, we thought we were going to see an uptick in terms of IPOs. Really, it's been the last 15 years that you've had a significant, about an 80% reduction in the number of IPOs. And so the very best companies are waiting until they see an environment where investors are going to receive them more favorably. We haven't seen that yet, and we were hoping Snap was going to be a catalyst. But now in our portfolio, we have companies, large positions in Spotify, Dropbox, Lyft, Palantir, Coursera, all who are sizable businesses growing fast. And I think it's the right time. Will be great public offerings. Well,
speaking of which, Spotify is another one that said it was going to close a couple of hubs. What's happening? There's such appetite for tech shares that are public for the most part, and yet you have these companies that were unicorns that were supposed to be the next big thing, and they're kind of having down rounds.
Well, I think the very best companies aren't having down rounds, and Spotify is a business that, one, is doing extraordinarily well. Secondly, it's positioned.
But it is closing hubs in certain cities.
Spotify?
Mm-hmm.
I mean, Spotify is doing the music service. I mean, I think the key things for that business, you look at its subscriber base, it's a very sticky subscriber base. It's growing very, very fast. So the key things, I think, for it to be a public offering, public company, is its relationship with the record labels, which is evolving nicely. So I do believe Spotify will be a public company here over the next 6 to 12 months for sure.